I think they are concerned about it. I think they're concerned that it would put a headwind in Trump's agenda. But I would tell you this, that if the stock market is a forward-looking mechanism, the stock market is telling you it doesn't matter if the House of Representatives is retaken by the Democrats.
Because that's already factored in, you're saying?
Again, if the stock market is a forward-looking mechanism, it's supposed to discount future events. It's telling you it doesn't matter if the Democrats retake the House of Representatives.
Or it's telling you that right now the market is focused more on trade. So we've seen softer headlines coming out of trade for the last couple of sessions. We've seen Apple, the de-risking. Apple used to be a value and a growth stock. Now it's seen as a growth stock where Bob pointed out that IBM is outperforming Apple. So let's see where that finishes us off. But I think that the market wants to move higher short term at least.
I think a big question is what happens to the bond market off the elections. I mean, Rick, do you have a sense one way or the other, no matter what the outcome is, what happens to bond yields have been such a sort of sensitivity point for equities lately?
Well, I think you bring up a good point that I do believe, unlike the guests, that the House of Representatives would move equities a bit more. I know they're forward pricing mechanisms, but they're not crystal balls. And the way they forward priced in November of 2016, before and after the results were out, I think really underscores that. But I do think that the fixed income market is a bit isolated from the direct volatility of the midterms. Not that the grand scheme of things, the direction of the economy or how you believe one party or another may be better for business won't affect the bond market, but I think the effects that it has on equities will be taken into consideration. I just don't see a big knee-jerk reaction immediately in the bond market, so you're absolutely correct. The MO of the bond market has been real consistent all year. It moves higher and it sticks, and it's been very orderly. Today, for example, the ranges weren't large, but the long end might have given up a basis point as most of the curve did. But that's because it gained double-digit basis points on the long end to the upside last week. So you're exactly right. There may be more volatility in the dollar index and the equity markets, both, in my opinion, than the fixed income markets after the election results.
Kate, does the NASDAQ trail the other two major indices for the rest of this year?
It probably does, because I think investors are looking to diversify their portfolios beyond the tech sector, which had performed so well. That doesn't mean that individual tech stocks can't do well, but I think it's other sectors that are likely to do better, especially if we continue to see signs of solid growth and the election doesn't disrupt those expectations too much, which I don't think it'll do.
So, Jeff, can you get sector specific with us around the elections? Let's say we see a surprise. Let's say the Republicans maintain control of both. What sectors do you want to buy in that case? And vice versa, if the Democrats get more power than expected?
I think you want to buy tech, energy, and financials and healthcare no matter what happens in the midterm elections.
Tech? What did you say? Financials and healthcare? Why tech? Doesn't tech lose
and
either
energy.
way because both parties beat up on them?
I think some of the tech stocks have been sold off enough. So some of the FANG stocks down 15, 20%. I think they've sold off enough that valuations are better than they were a couple months ago. Energy looks to me like it's washed out. Financials should be doing better than they currently are. And healthcare, the demographics are in play for healthcare.
Stephen, in general, whether it's midterms or other factors, you're getting bullish into the rest of the year.
Yeah, I think the seasonality, you've had funds that have underperformed that actually got their year taken away with October that need to make up for that performance. I wanted to see a test of the February lows to give people the conviction and get back in, wash out those weaker players. But maybe we're not going to get a shot to do that. The seasonality is really pretty important going into December and into the new year. I would be a seller first quarter of next year, but I would be a buyer into year end.
And Wilfred, one of the reasons I brought up sectors is because a lot of people are watching the banks into tomorrow, and they say that if the Republicans keep more control than expected, that's good for the deregulatory push that the president has been making. If the Democrats get more control, some of that could be rolled back.
Do you know who's going to be, I'm sorry to interrupt, do you know who's going to be the chairperson? It's Maxine Waters will be the chairperson, but they really can't do that much without the Senate. Anyway, and the Senate is not going to change, but the headlines will be fast and furious coming out. And maybe that's enough to be the headline.
I think it's overplayed, partly because, as you say, the Senate likely to remain Republican. But more importantly, President Trump's already made quite a few crucial appointments. There aren't as many that relate to the bank that are still to make. Their lower level ones. So that the guidance on regulation will come from the people that have been appointed in the last couple of years already. I don't think we ever expected huge waves of deregulation for the big banks anyway. We've got some for the smaller banks. It'll be a win and a positive surprise if we get it for the big banks. But I don't think either way, the crucial factor compared to 2 years ago is we're not seeing ongoing incremental severe regulation.
There's a
on
little
the big
chance where Sarah said the little chance that the Republicans can keep both the House and the Senate. There's 20 races in the House that are within the margin of error.
And where would you want to be if that happened?
So I would think that you would have to go with energy because then you're not going to roll back any of the EPA standards. I would think that you would want to be financials. Knee-jerk reaction, but financials have not reacted that well. And I think tech or industrials, that's the wild cards.